More time and we're live. And thank you very much for joining us this morning as we get into Enterprise Thursday. And a good morning to you, dear Stephanie. How are you doing?
I'm well, Manyumba. How are you?
I'm good. I'm good. Good to hear that everyone's got me on my toes, and everyone's on their toes, getting and ready and raring for this morning's show. So, not to keep them waiting for too long, Stephanie, let's get into Enterprise Thursday. Today, we're going to be discussing obviously market data, some of the bit of the roundups, and we'll be talking venture capital. And the question of today is, what Africa do you see? Do you see one that is pain and struggle or growth and opportunities? What Africa do you see? And that's going to be our main topic of discussion today as we get into trying to raise venture capital in Africa and also venture capital trends. We'll be talking about the Africa Venture Capital Report today. But let's get into this morning's conversations on Enterprise Thursday. First things that we're getting into in terms of our market roundup is that we've seen that the Kwacha has continued its negative slide, 0.77% loss against the dollar. Dollar is at 19.1743 as it closed off yesterday, and it's going into a buying pattern up 5.95% on the year. Yesterday, we did see the stock market come down as CEC shares dropped a little bit, but up 1.68% on the week and up 13.96% year to date. And yesterday, we also did see that the bond market was up 0.12%, but down 1.30% in dollars. And interest rates did start to slide down after that major jump that we saw earlier in the week. Now, proceeding forward, we do also see that in rands, we saw that the rand was down 0.94%. So we are having a stronger dollar, even though we saw the US downgraded yesterday. So some of that news has still not reverberated into the rest of the global economy. But we did see that on the month, the rand is up 9.58% with a bit of momentum pushing it forward. Simultaneously, we did also see that the bond index, as I said, is up 15.78%. Year to date and up 1.86% on the month. And USD GRZ bond index is up 8.57% and down 7.13% in the last month. And as you can see, interest rates are up 0.91% year to date and up 0.36%, mainly due to that huge jump that took place. Commodity markets, we did see that copper has continued to slide negative, down 1.5%. Obviously, negative news is still coming from the fact that the global economy is still showing a lot of signs of industrial weakness. Industrial data such as PMIs are continuing to show weakness, with housing markets continuing to show weakness. Oil slid down to 83, but it's still holding above the 80 mark. Down 2.86% year to date, down 1.98%. Yesterday we saw gold drop down 0.4% yesterday as well. Now, in terms of cryptocurrency, Bitcoin was up 1.6%. This is mainly due to the Kwacha itself, the Kwacha losing value. Ethereum was up 1.3%, and gold was up 0.03%. Year to date, we still have Ethereum, Bitcoin up 85.98%, Ethereum 62.91, and gold. So if you take a look at the cross asset mix, it's the same thing we're talking about here. Most of our defensive assets are the ones that are outperforming. Bonds are still up 15.8%. Stocks are up almost 14%. Dollars are up 6%. And gold up 14.4%. But I wanted to give people a bit of insight as to what this looks like in terms of quarter to date. So we've got data here. The brown one is what we call that's quarter two performance, the quarterly analysis. So what you see is bonds were up 7.6% in quarter two. Stocks were up 5.1%. Dollars were down 17.5%. Gold was down 19.2%. Bitcoin down 11.4%, and Ethereum down 13.1%. So you can see these were poor performing in the last quarter. In terms of quarter to date up to now, since the end of quarter two up to now, we've seen that bonds up 2.15%, stocks up 1.5%, dollars have bounced back about 9.02%. Gold is up 11.45%, Bitcoin up only 3.87%, and Ethereum up 4.5452%. So this is what we mean when we say US dollars, gold, Bitcoin, Ethereum. These are very volatile assets, while you can see the steadiness in bonds and the stock market altogether. This is why we said yesterday we asked the question, what's more important, high growth or stability? This is an exact picture of the fact that bonds and stocks are your main picture of stability, while dollars, gold, Bitcoin, and Ethereum are your vision of just high growth but high volatility. In terms of our four horsemen outlook, we do see that crude oil inventories continue to reflect a huge drawdown yesterday of 17 million barrels, pushing prices in the upwards direction. However, there's still solid weakness there. In terms of interest rates, we did see that mortgage rates in America went up, causing headwinds in the market, while Brazil also dropped its interest rates by 0.5 basis points. By 0.5%, 50 basis points. That's good for the market, showing that there is a decrease in interest rate pressure from inflation. While we also did see that all car sales in the USA were up to 3.14 million from 3.08 million. We also saw that strong jobs numbers in America, where there were actually still 324,000 jobs created in the ADP non-farm payroll change. And also, Caxton PMI shows that the service sector of China is still strong, stronger than expected. So China is becoming a service-oriented economy. This is actually lining up quite strong. Now, in terms of MBA mortgage data, we did see that there is a 3%. We did see that there was a 3% decline in mortgage applications, a slight decline in the purchasing index, a decline in the market index and the refinancing index, showing headwinds across the whole mortgage market in America. Weak housing, weak mortgage market. So industrial is still weak. This is what's affecting things like copper, oil, all the major industrial metals. Industrial is still weak. Now, let's get into the stories of the day, our deep dive. First one that came out is government has abolished the 3,000 kwacha retention fee, in hopes of boosting tourism industry growth. Players in the sector now only need to pay the registration fee without an additional retention fee, resulting in a 6,000 kwacha saving over a 2-year period. The part of the government's efforts to reduce the cost of doing business and help promote tourism activity. Remember, tourism is one of the areas that our government's trying to strategically target. So they're trying to get as many people to get in with as few issues in there. Casino operators will still be required to pay the 3,000 kwacha annual retention fee. Though, to be honest, probably the small-scale tourism players, this is going to be a savings for them to get as many of them as possible. But the large-scale ones, they're still trying to deal with how to attract and market. But remember, we have put in over 300 million kwacha into marketing Zambia for tourism purposes. So that is supposed to additionally bring in the demand, while costs of doing businesses is supposed to come down. Now, in terms of other news that came in Africa, Zimbabwe recorded the highest level of poverty across southern Africa. Although inflation in Zimbabwe is expected to come down from 184% to 36% in 2024, as the government maintains tight monetary policy and global prices come down. In Southern Africa, African Development Bank is also expecting that inflation is expected to halve in Southern Africa from 13.4% to 6.7% for 2024, mainly due to similar factors. Simultaneously, we did see that the U.S. government's credit rating had been downgraded following concerns over the country's finances and debt burdens. Now, it has gone from AAA to AA plus, based on the expected fiscal deterioration, political polarization, and international status of the dollar. I think that's the one that really is affecting America. Also, the international status of the dollar. People are not really that. There's not much exuberance about the dollar itself, so you can see the diversification of a lot of bases of reserves for a lot of developed countries around. But although U.S. Secretary of the Treasury Janet Yellen did call the downgrade arbitrary, because she stated that it's based on outdated information. So there's a bit of backlash, there's a bit of backfight there, and we are still seeing a stronger dollar on the market. And in terms of other and crypto news, KPMG touts ESG benefits of Bitcoin and counters the misconceptions in the new report. They have been looking at emissions as the greatest indicator of environmental damage rather than energy use. And they're saying that it is contextualized that Bitcoin in relation to emissions is much in relation to those of other sources that range from tobacco to tourism, and found that Bitcoin is the second smallest emitter, not energy user. So I think this was the biggest concern. They were saying that Bitcoin was using too much energy and therefore was a strain, was not green enough. However, we did see that has been countered. So today, Stephanie, in our conversation, we have had quite a lot of people. We've had a lot of conversation generally about capital. I think one of the biggest things, obviously, this government has always been strained on is access to capital, access to capital. And as one of the things that we should be looking at is how do we get venture capital for very good ideas? Okay, how do we
Mm,
get ideas to become companies? Because how do you create employment is someone, Stephanie, has to have an idea, turn that into a service, hire people to sit to help them run and deliver that service or sell that service, and now you've got a business that has employment and is probably a company. So the importance is how do we get people the right amount of capital, the right mix of capital to turn things into capital. I mean, to turn ideas into companies. And that is the main drive of today's conversation. So I want to start first, Stephanie, by going through the AVCA, which is the Africa Venture Capital Association data for 2022 on venture capital. Okay, so as you can see here, for everybody who's watching, one of the things you can see is that the volume of venture capital, this is the number of deals, the number of companies invested in, has actually continued to steadily rise across Africa. And they did add venture debt coming in. So the number of deals is growing by about 31% year on year. Okay, so we had
mm,
786 invested companies or invested deals, venture capital deals, plus about 67 venture debt. In other words, 853 venture deals that were funded last year across Africa. Not Zambia, Africa, the whole continent, people. Just so that you understand, that's the whole continent. There are tens of thousands of these things, and we're getting less than 1,000 of them. So we're getting very few. Now, in terms of the value, in terms of it in billions of dollars, we have seen that that's also been growing by 33%. And especially since 2020, we found that we jumped from just 1 billion, 1.1 billion in 2020 to 2021 to $5.2 billion worth of venture capital coming into Africa. Now we have $1.3 billion of venture debt, but now we close in 2022 with $6.5 billion of venture funding for companies that do meet the venture capital threshold, businesses that are investable for equity or for debt purposes. 1.3 billion in venture debt and 5.2 billion in venture capital. This is the AVCA report. You can find it on their website. So, who are the people who are consuming most of this? If you're looking at it in terms of value, about 39% of it is, in fact, over, to be honest, about 66% of it, two-thirds of it, is for businesses that are over, that's where investments were over $20 million. So this already shows you that venture capital investors are still looking for big deals. They're not looking to fund somebody who needs $5,000. They're looking to fund somebody who needs $20 million, and where $20 million is worth investing in. So if you want to get venture funded, you already have to be running in order to get these things so that you have the right valuation that they can invest in. So that's the main thing you need to try and look at. So venture funding, about 66% of venture funding comes in the form of businesses that are funded about 20 million. Now, in terms of the actual deals, about 27% of them were companies that were below 1 million, that were below $1 million worth of funding. Now, from what I've seen with a lot of the venture deals in Zambia, they fall below this category. There are not that many that are above $1 million. So already this is one of our problems. We have not built big enough deals for people to invest in. It's one of the biggest problems that we face. And this is why I said our entrepreneurs have to be able to get past that point where they're selling millions a year already, like generating millions in revenue a year for them to be able to access. So for you to be able to access venture capital funding. And remember, we have a huge risk rating already as a problem due to our national default. This already, by the way, is affected by our sovereign default. So this is one of the problems that we will be facing. But already we don't build big enough companies to attract venture capital, because no one is coming to give you your first $10,000 to get started. No one is coming to do that for you unless maybe they're an NGO or something. Now, when we're looking at where most of these venture deals are being done, if you take a look on the left, on the left, we should be looking at volume and value. Sorry, I meant to say on the left, we should be looking at value. So if you look at it very carefully, 21%, 11% of the VC value in 2021. This is what they're using 2017 to 2021 versus 2022. If you're looking at all of that in terms of value, you're seeing that 11% of the deal value over the last 5 years was in North Africa, but 21% last year was in North Africa. West Africa took 16% last year and 23%. Southern Africa, which is really anemic here, is we're only seeing 11% of deals with less than 9%, with 9% of deals. We are the slowest scoring region, and most of that has been going to South Africa. So already we're having an issue with having enough venture capital to come in. If you're looking at where most of the VC value is coming from, you're looking at where most of it is ending up, and this is by headquarters of companies. Nigeria, obviously, America, these are African companies headquartered in America that consumed about 17% of the money. About 15% of it goes to companies in Nigeria, 13% Kenya, 13% Egypt, and 10% South Africa. So you can see the rest of Southern Africa, I think, got like 1% of the money. So that already shows you that it really is a tight race in venture capital amongst the top countries, whether it's Nigeria, Egypt, South Africa, Kenya. This is where a lot of the money goes first. Now, what sectors, Stephanie, I think this is a very important question for most people. What sectors are attracting the most venture capital in Africa? Because then it tells people what kind of developments or what kind of products or businesses are going to be funded in terms of venture capital funding. So if you look very carefully here, and I'm going to look at it in terms of volume, the number one is still financial services. So if you're creating a fintech, if you're creating a financial service product, by any way, shape, or form, or something that supports financial services opportunities, this you're more likely to get funding. If you even look at here, financial, in terms of value, 60% of the 2021 value went to financial services funding. 42% of the 2022 value went to financial services funding. Now, consumer discretionary got quite a lot of volumes, but it was industrial that also got the value. ICT was number 3 in terms of where the most money was going in consumer discretionary. So these are your top 4 that you're looking for. Financial services, industrial, information technology, and consumer discretionary are where you see a lot of VC money in Africa is going. So this is telling you what they're looking for and what they're looking to support. Now, in terms of if you're in the technological space, people, especially if you're an app developer or you're trying to develop some sort of technology, this is the technology that is the most popular amongst VC investors. Number 1, fintech. So already you can see a lot of money goes into financial. Okay, that is how they value investing in Africa. A lot of it goes into financial, then e-commerce, then edutech, then clean tech. So if you're looking at what the most likely funded, it is fintech. If you're a developer looking at where to get funding from or what kind of products are the ones that are going to attract a venture capital firm to eventually come and invest in you, you most likely have to be developing some sort of fintech. That's what they're very okay with, because they're looking at the future of Africa as the financial systems that people are going to be investing with. And finally, Stephanie, the question that we have to ask is, who is investing in Africa? That's the big question. Where is the money coming from? And the biggest investor in Africa is fund managers. So who should we be talking to at a policy level? Who should our entrepreneurs be marketing themselves to? Who should our entrepreneurs be studying if they want to eventually get venture capital to invest in them? It's fund managers. Okay, fund managers who make up the biggest amount of venture capital investors. Of course, part of it is African fund managers, but a lot of it is global. Investment firms also who deal directly in venture capital, corporate venture firms as well, financial institutions, foundations, then eventually accelerators and incubators, angels, and so forth. But if you're looking at it, really, it's the top one is fund managers, investment firms, corporate. So a lot of these ones are looking for companies that have got good, solid teams. They are attacking an opportunity that is growing. They already have sales in the market. Not you are thinking that if I just get you already have people paying for your product. Okay. And they can see a track record. These people, by the way, venture capital people expect about 20% growth in your sales on a monthly basis. Listen to me again, people. Globally, these people expect 20% growth in sales on a monthly basis. So you have to have an aggressive sales team, an aggressive marketing team. Have you worked out your marketing, your sales and marketing system? There are quite a number of influential people who can teach you digital marketing and digital sales to help with that. If you're an entrepreneur and you want to eventually get funded, you need to start making sure that you've got the sales momentum behind your business to support this. So this is the AVCA report that gives us a very strong breakdown that yes, there's more venture capital coming into Africa. It's barely dripping into Southern Africa. It's mostly getting wiped in by South Africa. So if you're Southern African and you want access to venture capital coming into Africa, you need to start by probably extending some links into South Africa, because that's where the majority, about 90% of venture capital, 75 to 90% of venture capital that goes into Southern Africa comes into South Africa. Okay, so if you don't have links there and you're sitting duck here waiting to try and get funding here, it becomes a little bit difficult. So networking is extremely important for you, and then you're able to then flow that in. So I'm going to talk today, Stephanie, about obviously the future of Africa. So this comes from an interview with Strive Masia, who is the Econet chair and founder, and also Econet is one of the owners, I think, of Liquid. And this is him talking about what perspective we must pursue when it comes to growing Africa.
I would say to them, perspective is extremely important. This is a business meeting, so what's the perspective? Africa is a continent of 1.3 billion people. Okay? In the last 25 years, our GDP has gone up from 350 billion to 3 trillion. We're one of the fastest expanding regions in the world. Only China expanded faster than us in that period. Okay? Do you see that Africa? Yes, we have a lot of challenges. Who doesn't? Europe has a war in the middle of Europe right now, you know. So we all have challenges, okay? And each generation has to address and take on those challenges. But Africa also has extraordinary opportunities. So I talk to these young people about reminding them that the glass is really, in their case, not even half full, but 3/4 full. Okay? There is just so much opportunity for them to take on the challenges of this continent. They're better educated than anyone before them. They're better connected. They are more conscious of their challenges, and they're more confident than any generation before. So yes.
Okay, so that was an interview by Strive Masia where he was trying to tell people perspective matters. You can look at the situation we are in as Africa. Yes, we have pains, we have poverty, we have struggles. Or you can look at the progress that we've made. He pointed out that we have grown. So the question I'm going to ask for today, for everybody here today, is what Zambia do you see? Do you see growth and opportunity, or do you see pain and poverty? What Zambia do you see? I'm going to throw that question at you first, Stephanie. What Zambia do you see?
Just before I get to answer that question, if you're listening to us and you want to answer the question, what Zambia do you see? Then definitely get to us on 077-1616-290. What Zambia do you see? Is it a Zambia of pain, or is it a Zambia that is likely to prosper?
Is it growth and opportunity? What do you see? Growth and opportunity, or pain and poverty?
growth, opportunity, pain or poverty. Well, I see a Zambia which could actually have growth and opportunity, but I'd also see a Zambia that could have pain and poverty. Now I'm standing in the middle simply because it's partly the decisions that we take. Zambia as a country, we don't even have to talk about opportunities, Munyumba. There are a lot of opportunities in the country. Talk about the natural resources we've been blessed with. So the issue of opportunity is something we don't even have to struggle about talking about. We have opportunities, but do we have the people that want to utilize those opportunities? Do we have what it takes? So yes, we could see opportunity and growth, but also we could also experience pain and it's based on the decisions that we make. That is for me. So what I see is if we're able to, well, just before I finish my thought, let's pick this call. Hello. Hello, good morning.
Good morning.
Money FM Radio, tell us your name and where you're calling us from. Kefas Musonda.
Yes.
Give us your comment. What Zambia do you see?
I see Zambia.
Turn down the volume on your radio set. Would you please reduce the volume on your radio set?
I see Zambia of growth and opportunities as well.
Yes, tell us why you see that happening.
Yeah, it's happening because of the mindset change that we have embarked on. Just like listening to Money FM, at least our minds are changing now from consumer mindset to growth mindset. Yeah, so that's how I see Zambia.
Nice one.
Yes.
Thank you.
Okay, you're most welcome.
Tell us how you see Zambia currently. Obviously, what was the question again, Munyumba, on the other side? You might just want to put it there on the tab for people to see, especially if you're listening via Facebook. But of course, we do have another comment right here on the mainstream. Hello?
Joseph, back again.
Yes, Mr. Joseph, what Zambia do you see?
I think I want to quote Mnyumba from some 3 weeks ago.
Okay.
Where he mentioned something to do with Zambia having capabilities, or we are capable of doing something, but then we have a mindset problem. Yes. So the issue is the Zambia I see is a Zambia that can be able to prosper and grow. Look at this. I come from a region of this country that is able to grow grains like rice and wheat, because I come from the western part of Zambia where we have plains. And water is readily available, especially in the rain seasons. But then look at how many people actually venture in that agriculture sector and actually do that farming. Very few. And the very few also even on a very small scale. And here we are mourning that globally we are about to experience food shortages because Ukraine is now unable to export grain via the Black Sea because Russia pulled out of that deal. And we could have taken advantage of that. We could have exported the wheat, we could have exported rice, but we're not able to because of what? Because of our mindset. We're not able to look at the opportunities, and we have the opportunities, but then we are not able to take advantage of them. So as long as we do not look at those opportunities, which again, by the way, are tailor-made by also politics, because a lot of politics come to play. We are not talking about government pulling out of the CCP issue and all that. So if we don't change that mindset, the mindset issue that was preached over and over, we will not be able to achieve the capability that we have. We have a lot of potential, but then we are not achieving. So as long as we don't change, we'll remain a Zambia of poverty.
Thank you for that comment. And I cannot agree more with Mr. Joseph. Of course, if you're listening to us on Money FM Radio, you might want to give us a call on 077-1616-290. So what type of Zambia do you see? Do you see growth and opportunity, or do you see poverty and pain? Now, do you have a missed call on the other side? If you're going to call us, then definitely do make it a call. Remember, we'll not call you back. So the number is 077-1616-290. Munyumba, what Zambia do you see?
Well, and I'm going to go straight into something I'd actually prepared regarding all of this. The first thing I'll tell you is from an African continent. I'm going to give it to you from the African continent perspective, because I look at it as a Pan-African view, is that cumulatively this continent has seen 370% GDP growth over the last 25 years. Even Zambia over the last 25 years has gone from a $3 billion economy to a $20+ billion economy. So one of the things that we really have to look at when it comes to Zambian to economic progress is that we have had already a trajectory of it. There is a lot of potential when we put our minds to it that we can actually reach out. So we need to look at how we see ourselves. As we said, we can look at it in terms of the struggles and pains, inflation is high and everything, or we can look at it as we can look at the struggles and pains as signals that there are inefficiencies in our system that we need to fix. So I'll tell you one thing, Stephanie, which just to boil it down, it really just depends on who you think is responsible for fixing the problems. If you think somebody else is responsible for fixing the problems of this continent, then you will see this place as a place full of pain and poverty. Okay, that's what you'll see it. But if you think that you are responsible for fixing the problems that we find here, then you will see it as growth and opportunity. That's the reality. So I think the one I see is where we all have to now start banding together and say, okay, so what skills do each of us have and how can we contribute? I think about the best story I think about, Stephanie, is when the children of Israel were building the temple. They just exited Egypt, and they had all this gold and silver which was handed to them, and they had skills. They had skills and things around them. They were given things because they were given some gold and silver and some animals by the Egyptians, and they were on their way. They crossed the Red Sea. The Egyptians are dead. They're in the desert now. And then God instructs Moses to build a temple, to build the ark. And he actually instructs Moses on which people and which skills are going to be needed to build an ark and who will have each of these specific skills. Call this one is a tailor. Call this one is this. So building a national economy that thrives and does well for many people is one thing, Stephanie, that requires each of us to not try and do everything, but to do our part, to go into the industries we are confident in, good at, and we are skilled in and experienced in, and then to go and start making changes in there. Because everybody who succeeds at building something will eventually, Stephanie, build a company that contributes to economic growth, that sells products to customers, that solves the problems of customers, and that also creates jobs that pay salaries to people. So that's the key to Zambia being a land of opportunity, but that requires, do you see it as somebody else is supposed to come and fix the inefficiencies of the market, or are the inefficiencies of the market your responsibility to fix? Because really all we have to ask ourselves is, we can say Zambia is disorganized. That's one of the things I've seen complained about. Zambia is disorganized. Well, do people understand that there's a lot of money to be made organizing the disorganized? Okay, organizing markets, creating systems, creating connections, creating marketplaces, virtual marketplaces, trading platforms, whatever it is. A lot of the benefits of this country come from the fact of actually organizing the disorganized. So I think this is where we all have to try and look at it. So that's why I think I'll say, from the question that I've posed out here and the fact that, yes, there is a lot of VC flowing around, if we want to become attractive, one of the things that is going to come out of all of this, people, is that once we stabilize, remember, I set this up carefully. Yesterday, we talked about investors valuing stability and predictability. So once the Forex rate is stabilized, inflation is stabilized, and growth stabilizes, once you have these three things stable, okay, it creates an environment where investors feel comfortable now analyzing investment opportunities, individual investment opportunities. They get very scared when they see an unstable situation, so they back off because they say, okay, we'll put $1 million into a venture here, but then that $1 million is going to lose half its value just from the forex rate when we come and pull that, or when we come and now try and materialize that gain. Secondly, where do we exit? There's no exit ramp on the stock market for us to be able to go through. How much is this company growing by? So when you're looking at these things, then the biggest question I think most people need to ask whenever they're trying to invest, whenever they're trying to start businesses that are investable, and this is for the entrepreneurs, is look at the big questions that venture capitalists ask. They said, could this be a big business? Are you building something that could potentially evolve into a big opportunity? 2, is this a product that is going to be a fundamental way of life for the people? Think about taxi apps now, Stephanie. We use taxi apps as a way of life now. Those things actually dictate the way we move around. They're part of our budget line. They're part of the way we even talk. I'm going to use this app. We even use it as a verb. I'm going to just get to this or get to that. So we know those taxi applications inside out because they've become a way of life. And also the final question is, will it be something that become nearly impossible to live without? So when you are creating something, looking at it being of value, looking at it being of prosperity, are you looking at something that becomes a way of life for people? In other words, solves a day-to-day problem in a significant amount of people's lives. Will it be something that will be hard to live without? And will it be something that has a lot of room to grow? Okay? So these are the problems that if our entrepreneurs look at them and say, if we can attack these things very powerfully, if we can truly attack these things, then we can create a country full of prosperity. We can create growth and opportunity. But if we sit and say, the government must look into this, or somebody must come and help us, we hope well wishes, then we can forget about it. And that's where I leave it. We do have one comment, coming in from Vern. So we have 2 comments. From Melusi Katai Sampo says, great question. I see growth and opportunity if we embrace organized systems in everything we do. We need to let go of chipante living. I see growth and opportunity. This is Mwenyando Anto. And we've got Vernon who has come in and saying Zambia has great potential to be the best and the worst country, but it is fueled and driven by our mentality. Reality is we are good at pointing out the challenges, but rarely are the solution oriented or proactive. We can beautify Zambia even more or break it even further mentality.
That's true.
And that is where I'll leave it today, Stephanie.
On that note, Munyumba, of course, we should be getting to break off today. Really, the question for us is, where do you see Zambia? But for me, it's not the question, it's you yourself and the actions you take. Why you see Zambia is not determined by what the answer is from your mind, rather by the actions that you take. Until tomorrow again, Munyumba, it's bye for now.
Bye for now.